I've got a real nice gap down that I want to show you, and it deals with a standard alert that we have set up in our system, and you'll recognize it, but it's got a combination of other things that go along with it, and that's what makes it exciting to see how far this indicator will drop. I've switched over to the chart right now, and we're in a symbol called AKAM, and we're in September of 2015, and I've got it marked here. The zip chart and the power chart are on the right, as I normally always do, and the trend and the swing chart are on the left. And this symbol has dropped 14 bucks in overnight. Boom, just like that. And the standard symbol, or the standard alert that I want to share with you, and you can create these own alerts just by simply writing them for the scanner and then running them every day. And obviously, to catch a gap down, you got to run them at 2 o'clock in the afternoon or 3 o'clock, whatever you're, an hour before the market closes, or a lot of times you can pick them up a couple of hours before the market closes. And first of all, I want to describe this indicator to you. It has a green top. We define it as we have a couple of different runs that describe it, so we can possibly pick it up on different indicator or different scans, but it's at least 2 days long, so you have the green at 100 for at least 2 days or 3 days, and you have to have a peak, and by that I mean this peak right here, and you have at this point right here you have zip yellow at 97, zip red at 97.6, zip blue is at 93, and zip pink is at 93. So again, you're right up in there. Typically, you want the yellow and the red to be in that 96, 97, or 98 category, which we got right now, and zip pink and blue are right behind it. And on the next day, so that would be this day, that would be the day that this alert would kick in or take place. On this day, we still have the green at 100. Zip green is at 100. And right under it is zip pink. Now zip pink on this day here is at 94, so it's dropped just a little bit. But zip yellow went down to 88, zip blue went down to 82, and zip red went all the way down under 70. It's at 68. And when we see that big zip red drop, we know that the next day is going to be a decent short. And so it's just something that you need to find before the market closes so that you can take advantage of the big gap down the next morning. However, when we see this, what happens usually is that the opening will be slightly under the market. Sometimes it'll come at or slightly above and then just really go down. But normally it's down a little bit and then it comes back up a little bit and then it goes back down significantly. Sometimes not on that first day. Sometimes it's the second day when it really goes down. But today it went down $14 the very next morning in a gap down situation. And there's contributing factors to that, and I'll point them out because there's one here that we hardly ever see, and I want to point that one out first, and that's down here in the power chart, and it's Zip Scion. It's Power Zion, and Power Zion is a price value indicator. It's the only two price value indicators we have in the system. It's obviously not like the pink one because the Power Zion went down, but it's got that price value relationship built into the code, but and again picks up some different things that the Zip Pink did not pick up. But it's supposed to follow the price a little bit better than it does. But what happens here, if I'll blow this up a little bit or expand this a little bit, on this day right here, this is 2 days back, Zip Zion is in a low angle up. And the day before this takes place, Zip Zion goes down. And then on the alert day, right there where the vertical candle is, Zip Zion is down 2 full days. And the price has 2 nice green candles on it. And so when you, sometimes it would be hard to pick this up unless you analyzed every single one of these alerts, because they have a tendency, you know, if there's 1 or 2 there, sometimes, and don't misunderstand me, not always, but sometimes there's 10 or more of these same alerts on the same day. And so you have a tendency not to look at all of them, or to just give a cursory look at when you open them up and look at them, because we send them out on email alerts or different things for our needs, and so sometimes you miss them. But one of the big things you would miss, or you could miss inside of this thing, is that Zip Zion is down 2 days. Because as long as you remember and keep that in mind, that you have 2 price indicator lines, the Zip Pink and the Power Zion. But you know, the key, one of the contributing factors to this situation is that the Power Pink and the Power Blue are in a high M pattern, and it's not like a 2 or 3 day or 4 day high M pattern. It must be 10 or 12 days across those peaks. I mean, look how large that high M is, and the right pink peak practically reached the same height as the left pink peak. And we know what happens to a high M, it just goes down, and again, you're not expecting it to drop drastically like 14 bucks the next morning. Especially on it was 70, you know, it started out, that thing closed at 75.55. So it would, you know, usually go down 3-4 days, it'd be a really nice down, but bam, this one went down overnight 14 bucks. All right, so now I want to move over here to the swing chart, and I want to point out a couple things on the swing chart. We have this is a crescent move. It is I should give it a name so that I can talk about it so that it can be a recognized name. But basically, what happens is that it goes up like 4 days, sometimes 5 days, just in a nice rounded, go to the right curve, just like your Zip Pink will do when it's climbing up the ladder, price ladder. And those have a tendency, again, you get to this 4th day, right when this thing levels off, you know, when you have a real low angle in your swing Zion. But recognizably, the swing Zion is, you know, comfortably much higher than the other lines. So that's one indication that you have there, but it's nothing that you can pinpoint to a super, you know, like I'm going to gap down deal. As well, the pink, swing pink, it is going down, and you know, it's from previous discussions that it's a leading indicator, but one key thing is that it's down in a TOC lower. So it has gone down, it's lower than either of the 2 previous day closings. So that's a significant point that you would identify if you looked at all 4 charts on this day and you were examining it before the market closed, and you could capture it, bam, you could make some money. Up on the trend chart, you have all 5 indicator lines going up with the red indicator line going down. And that's the start of a downtrend. I mean, we've got a trend red down with a green candle. I mean, we use that as a way to find these shorts. That's one of our key methods in finding a short, is trend red in a BOC. If it hits a, we just oftentimes just use BOC rather than the BOC lower or BOC higher, just so that we can examine them and take a look at them and see what we think about what has happened. And this is a good one, and you can see that right away just by looking at the candles. You've got 4 green candles in a row, and obviously the next day it's going to crash. But again, the trend red, even though it is an alert that would tell you that it's going to be going down tomorrow, it's not going to tell you that it's going to gap down hugely like this. So when, you know, what I'm trying to say is that there is not a lot of extraordinary information inside of this alert that will tell you what's happening, except for 2 things. Okay, and that is the Zip Zion going down those 2 days, and you have this high M pattern that's really big, and really big patterns create really big drops, and sometimes they're 1 day, sometimes they're 10 or 12 days. Oftentimes, if you had a 12-day peak to peak on a high M, you could just as easily have a 12-day drop. But in this case here, it looks like it dropped instantly and then stayed flat for 12 days. So, and that's, I mean, it's amazing how things repeat themselves in this business. So that I want you to be conscious of that, because you need to look short term. I mean, when you look at an alert like this alert, like I mentioned over here that I started out with, the green at 100 with the pink right under it, and it's been 2 or 3 days long, it's ready to go down. Well, the key of it going down is when the yellow and the zip yellow and the zip blue and the zip pink all drop. That's the key that alerts us to say that it's going down tomorrow. But long-term wise, you can see here we got, looks like 5 days of a green top at 100, and then 10-12 days back we got another 5 days. It looks like 2 green pillars sitting here, and that just is a repeat of the power chart pink where I talked about the high M pattern. So when you see those 2 green pillars or you see the high M pattern, really look closely, because there may be some alerts. Again, you can set those alerts inside of your radar screen, or you can do them individually in your center. And because you can literally write anything, any code design clarification that you want in a scanner run, and the computer will spit it out and show you any symbol or any stock that has those conditions that you put into it. So look for that unusual one. I will say this, I hardly ever see this very often, and that is the Zip Zion 2 days down. That's a huge amount of divergence taking place, and that's what this that divergence there. We did have the BOC lower in the swing pink. That's a real key element to it, but what the Zip Zion going down 2 days and the high M pattern, those are, you put those 2 together, and that might be what really caused this alert to drop, or this symbol to drop $14. I'm not positive, but I tell you, we don't need to be positive about this, because we can see visually what happens. We just need to find them before they drop the $14, right? Whatever you do,